What's going on, everybody? Hope you guys are doing really well today. Today we're going to be talking about M1 Finance, and I did something very similar to what Ryan from Independent Investor has done, and that is kind of set up 4 or 5 different pies that you guys can replicate. And it's not going to be verbatim because I can't get every single stock in there. For example, some of the Bitcoin stocks that I have and some of the other over-the-counter stocks that I have in there, I'm not able to actually get into there. But what I've gone ahead and done is basically replicate my portfolio in M1 Finance, and then also gave you guys an idea as to about what percentage each one of those pies is of my portfolio. So for example, the ETF part of the portfolio is only about 7% now, but I'm hoping to grow that to much larger in the future. So when we go through this video, just kind of think about that. I kind of have what it is now and what it would be in an ideal situation. So if you're trying to replicate it for your personal standpoint or how you want to invest, that's something that you can go ahead and do. But I would say that 3 of these things or 2 of these things are probably going to be pretty constantly updated, or at least consistent. That's going to be the ideal portfolio, is going to stay relatively consistent. And the Moonshot portfolio is going to be something that I update regularly depending on what I think my moonshots are. But keep in mind, those moonshots are things that I've invested in September or July of last year. So those might not necessarily be the best entry points for you. So keep those things in mind when you potentially do copy these sort of portfolios. Use them as a potential guideline, not necessarily verbatim, because my cost basis will be completely different than yours. And if you invest in those now, you might lose money in the short term, depending on if you, God knows what. So anyway, hopefully that helps a little bit and gives you guys some clarity. The reason why I'm making this video is for you guys potentially sign up with M1 Finance. There's a $30, referral fee that you guys get. And by fee, I mean, you guys actually get $30. I get $30 if you guys sign up and utilize these pies. And I think that this is something that could be extremely hands-off if you want it to be, by setting it as an ideal pie. Or if you want to be a little bit more hands-on and actively manage your portfolio, you can do that as well. So just providing that opportunity to you guys, and hopefully you guys see a good opportunity to potentially get $30 free, right? So by this point, let's just hop right into the computer, go a little bit over each one of those 4 or 5 pies and see. I also actually have a little surprise in there as well, what I actually would probably put a lot of my money into in a market downturn. And I'm also going to be talking about it in a separate video. So this is your first time hitting up the channel, feel free to hit the subscribe button, because I will be making a video in the near future about what I will be investing in, the one stock, or one ETF rather, I'll be investing in a huge downturn that might come up after the stimulus kind of gets approved in the next couple of weeks. I'm assuming we're going to have a pullback in the market, and it might be utilized within the next 1 to 2 months. So hopefully you guys enjoy. Talk to you guys on the computer. Cheers. All right, guys, welcome back into the computer. So we will quickly just dive right in and kind of show you guys. Most of you guys know the portfolio is getting pretty good, right? $870,000 in terms of what's under management. Some of that is in the 401k, some of that is in separate retirement accounts, and then majority of that's about $700,000 is in the individual brokerage account, Roth IRA, stuff that I can manage, holistically on my own. And so that's what this M1 Finance project is really trying to accomplish, is allow you guys to do something of the same. So I have my normal portfolio kind of here, which is this ideal pie situation. But there's obviously a lot of the other accounts, right? The individual brokerage account, the Roth IRA, the Moonshots, a lot of these other things in there. So just hopping right into it, if you guys want to replicate your portfolio to be very similar to what I have in the 700,000 part of the $870,000 portfolio, this is about what you would do. So at the moment, this ideal pie is only about 7% of the portfolio, but I would hope that this would, if money wasn't a problem and I had infinite money, this would probably be about 80% of the portfolio, where about half of it is in VTI, about half of it is in the Qs, and 15 or so of it is in NUSI, and about 4 or 5% of that would be in QQQJ, to get some of that new technology stocks kind of coming in here. So what I will warn you though is, don't just replicate this, think about it in your perspective as well. While this is a great starting point, I'm historically really bad about getting technology stocks into the portfolio. So this is my opportunity to kind of say, hey, QQQ, that is about 40 odd percent, maybe even closer to 50% technology. I want to get a little bit more heavy weighting into that. Whereas VTI, is about 25 to 30% technology. But QQQ is heavily weighted in technology and healthcare, and it also excludes a lot of sectors as well. So if you're looking for something that is heavily focused in technology and healthcare, it could be your sort of play. But if you don't want to exclude energy companies and utilities, then look into more of a VTI and kind of fix this on its own. Over the past 5-6 months, it's returned about 12% and overall. But I think that over the long term, this thing will be able to return approximately 10% a year before inflation kind of kicks in. And this is where I would store about 80% of my money. I'm hoping to eventually grow this to be the largest part of my portfolio. Very hands-off, automated, no problems with it. This is the largest part of the portfolio at the moment though, the 70 odd percent. So I'd say about 500 or so, maybe $550,000 of the money that I have is in with this portfolio. I haven't switched my JEPI and QILD to NUSI yet, but I think I will be doing that in the near future. So I've kind of just started it off with that. But I also have a lot of Pepsi, Realty Income, Johnson & Johnson, Caterpillar, Wells Fargo, Stag Industrial, BP, AbbVie, Exxon, BBL, Altria Group, BP Midstream Partners, Philip Morris, a chemical company here. I don't know exactly how to pronounce it, but the technicals are good. The fundamentals of the company are good. JP Morgan, BlackRock, Shell, WP Carey, Verizon, Kroger, Main Street Capital, IBM, Bryn Mawr Bank Trust, Clorox, Pfizer, Waste Management, Procter & Gamble, McCormick, General Mills, and also Essential Utilities, right? So a lot of different positions in here, about 30 odd positions in here with very low expense ratio if you were to look at it, and that all comes from this large slice of NUSI here. NUSI is probably about my kind of like catch-all, but you'll see that this overall yields about 4.6%. So some of these yield very minimal amounts. Some of these yield 7-8%. Some of them yield maybe a little bit higher than that. But overall, 4.6% is pretty healthy. I think it is kind of getting to the higher end of what I would be potentially comfortable with. But since I am kind of chasing yield a little bit earlier in my career, it is something that, while I potentially do get the opportunity to say retire early or have more optionality and get more and more funds, I don't necessarily need to rely on these funds to live. It might be something where I slowly drag the dividend yield down over time. So that's just the way that is. This gives you an opportunity to kind of see what I'm invested in. But this also, I would like to caveat is, some of these positions I've had for quite some time, so my cost basis on them is really good. Like BHP, for example, I'm up over 200% on that company. Would I be investing here at the peaks? I don't know, right? And so keep in mind, if you're replicating this pie, to potentially think about those things. And this pie will also be in the description below if you guys are interested. I'll label it as the dividend/options ETF pie that you can kind of copy. And all you need to do is save it to your account here, click save to my account, and it'll basically allow you to kind of replicate it. Then I have my growth portfolio. This is really only 6 positions. Alibaba being one that I have 100 shares of. Amazon is a company I have about 3 shares of. I'd like to get that up to a lot larger. Google, I have 5 or so shares of. Disney, I have about 60 shares of. Facebook, I don't have any shares of, but currently selling pretty close to at-the-money cash secured puts to be able to acquire some at a pretty decent price here. And then I also have some shares in Visa. So a lot of these are technology companies. You could say Amazon is more of a consumer staple. You could say Disney is potentially as well, but they all have their technology sort of component to them. And they're about what I would say is a replication of what's in my portfolio. Very low dividend yield, as you can see. I think the only company that yields anything is Visa at the moment. Don't think any of these other companies do. Disney might reinstate their dividend, but no expense ratio here, so you don't have to necessarily worry about anything associated with that. But just in the past, couple months, or actually the past year, this would have returned about 28% or so. So relatively good, well balanced as well. So you do have some companies that, did fare really well. Some of them did not, but like Baba, for example, has kind of been a little bit flat over the past couple months, actually retraced a good bit. But I think overall, great companies to own throughout time. So this one will also be saved down there as growth, and this is about 15% of my portfolio at the moment. And then I do have my moonshots, where you can see this is like just within the past 2 months, it's up about 40-odd%. What isn't included in here is 2 companies, MindMed, which has done extremely well for me over the past 6 months to a year, started investing in like May of 2020, and then GBTC, which I invested, started about the same. That's Bitcoin, basically a replication of Bitcoin. So what I have in here, majority of it's 11 different positions for my moonshots, which is about, I would say, 10% of my portfolio. It's a little bit smaller. If you included Bitcoin, it'd probably get closer to the 15-ish%, maybe a little bit more. But because Bitcoin's not in here, it's only 10%. Yeah, Palantir, which is a good chunk of it. MoneyGram, which is kind of a play on cryptocurrency as well. You have the Genomic Revolution, ARK Invest ETF kind of here, and hoping to kind of play into that genomic sort of fund where that space is continuing to grow year after year. You have Wish or Context Logic, which is a kind of a discount Amazon. Then you have Virgin Galactic, which is a frontier into space. SRAC, which is going to merge with Momentous. It's a SPAC. You have IPO F, E, and D. Those are all SPACs as well. IPO E is going to merge into So Financial. This has been a relatively good one for me. All these are up over, IPO E is over 100%, but IPO F and D are up about 50% for me. You have BFT. Actually, on the warrants, I don't own BFT outright, but I own the warrants. And this is going to merge into PaySafe, so that's a good one. And then you have Virgin Galactic, which is another SPAC that is going to merge with 23andMe. So I think that one's a relatively good. So like I had mentioned, these have not all been included in terms of what I would consider my moonshots. So MindMed would be included in that, which I still have a pretty significant portion in. And GBTC, which is about a $41,000 position, is not included in here as well. So yeah, just kind of keep those in mind. I'll share that pie in the portfolio with you guys as well. And then going into the aggressive ideal. So I'll probably touch on this in another video. So make sure you hit the subscribe button. I'll talk a little bit more about this in the future. But in the case of a pullback, I will potentially move funds out of what I would have in a lot of different other funds, whether this is in the individual brokerage account and other funds, also my M1 portfolio as well, and move it kind of into an aggressive ideal sort of position, whether that's buying long leaps or whether that's buying a bunch of other things to basically have ownership or control of the shares. It is what it is. But this is inclusive of TQQQ, SPXL, and NUSI. NUSI being, a little bit of dividends kind of in there to keep a little bit of stability in the portfolio, but about 45% in triple leveraged QQQ and triple leveraged SPY. Not exactly going to give you every detail of the next video that is going to highlight when I would potentially put this into play, but it is something that I've definitely thought about, and even still, I might remove SPXL out of this as well. But what I fear, though, is if you take and only put money into TQQQ, you're not getting some of that other sector performance. But I'm afraid also that TQQQ would likely way outperform SPXL in a pullback and in a potential run back up to recovery, which I'll touch a little bit more on in my next video. But I'll also include this in my account as well. And I guess to give you guys an idea as to what you potentially would do with this is, once you save these sort of portfolios to your M1 Finance, you can do something as simple as to say, hey, add this to my portfolio. I want to have Matt's sort of pie in here. And you can sort of dictate. I have this at 70%, but you can make it whatever you want. And you could say, hey, I want this to be 5% of my portfolio. And then here you go. It shows up as 5%. And so you could add all 4 or 5 of those different ones and say, hey, I kind of want to replicate what Matt has, or hey, I want to have my ideal portfolio kind of be 80%. Matt's working to get it from 7% up to 80% in the long term. That's what I would like to do. I'd like to start off with that and then kind of have some of these other positions in here as well. But yeah, you can see here's like kind of my ideal portfolio. I would love to grow this to about 80% of the portfolio. VTI, QQQ, NUSI, and QQQJ. Well on my way to potentially do that. But yeah, just wanted to give you guys a quick update, give you that opportunity. Like I had mentioned, please take the opportunity to look at some of these positions and look at these pies, add them to your account, create an account. We both get $30 if that's the case. And if you're new to M1 Finance, it could be a good opportunity for you to be very relaxed on it. Feel free to reach out to me on Instagram or anything like that if you guys are curious about the M1 Finance opportunity. I think it's a really good opportunity for folks to be very passive. You can basically say, hey, I want to put in $500 a month and distribute amongst these different pies at a 40%, 40%, 15%, and 5% rate. And it'll do that very easily for you. If, let's just say, the past month VTI has been on fire, it'll add it to QQQ and basically try to replicate this sort of target percentage that you guys have in here. And so same thing with the dividends and options ETF here. Let's just say you want to have all these different companies at these sort of percentages, then it would basically replicate that. So really appreciate you guys, appreciate the opportunity for you guys to let me share that with you guys. This is about what the $699,000 part of the portfolio is. The other $170,000 is in a Roth 401k and also like an employee savings plan, which I can't really dictate what it invests in. But this is about $699,000 minus the Bitcoin and minus one or two other small positions in here as well. But hopefully gives you guys an opportunity to potentially see how I invest my money in terms of a dividend portfolio as well as moonshots and growth, and see if it's something that you might want to replicate on your own. And like I said, both of us get $30 if you sign up utilizing one of these links. And of course, let me know how I can help in the future. So thanks guys. Hope you guys have a great evening. I'm gonna go grab some dinner and probably make another video for you guys. So talk to you guys soon. Cheers.